Yo, what's going on, guys? This is your boy Trillionaire Mac. Welcome back to another video. So in this video, we're going to be breaking down the EURUSD day trade that I took this morning during London session. I was actually preparing to take this trade during New York session, but all the confluences took place during London, so I was up early this morning trading London session. All right. Now, before we get started, if you enjoy this content, feel free to subscribe to the YouTube channel. I would love to have you a part of the family. Feel free to leave a like on the video if you find value within this video, and feel free to hit that bell notification icon to be updated whenever I upload a new video. With that being said, let's hop right into it. Now, before I actually hop into the trade, okay, I was actually live trading with I had a session with a student actually, and on that session we were talking about, he asked me what was I anticipating for Euro USD as relates to day trade, and I'm just going to press play on this. So let's make this a little larger. So essentially in this video, I'm basically explaining to him what I'm anticipating from Euro USD. Okay, I'm probably saying a lot in this video, so I'm going to keep it muted. But I think I draw it out if I remember correctly. Let's just watch it play out. Yeah, so the reason why I show you guys the before, the reason why I take time to show you the before is because I want you all to understand that these are not cherry-picked trades. Okay, these are actual live types of trades, before and afters, things like that. Oh, let's bring that back. Here we go. So as you guys can see, we are within this area here. I basically draw my arrow and I tell him, you know, price was right here at the time. Okay, did I know that it was going to reverse here? Not necessarily, right? It could have pushed a little lower and then reversed. Yeah, you know, it could have pushed a little higher, pushed down, and then reversed. Doesn't really matter. But the, overlying factor is the fact that I wanted to see price tap into this zone here and then give us a valid entry for us to take sells, for our take profit here. Okay, so now let's hop into the trade. So this was really based off of the M15 time frame as it relates to finding out who's in control, whether it be supply or demand. So we can see here we have a valid, okay, flip zone here. All right, we create a failed reaction, supply comes to the market, pushes price down. When price returns back to that supply, I would be looking for price to possibly reject this area. Now, it doesn't necessarily have to, right? One thing as traders that I think we kind of dig ourselves a hole is when, okay, so you guys saw that I had this arrow drawn up here and then I had this arrow drawn like that, right? If price would have, let's say, broke out of this range and then decided to come back, right, we would have to essentially be light on our feet and be able to change our bias at the, at the turn of a dime. Because honestly, we could have also broken above here. So I told the student as well that if price, pushes above this way and gives us his own wipeout, and we'd look for price to return back to maybe an area here or maybe an area here and then continue to push to the upside. So it's very, very important that you guys remain nimble and flexible while you are trading. If your trade idea is wrong, then cut ties to that trade idea and formulate a new one that is on the right side of things. All right, so it's important to keep that in mind. Now let's go to the lower time frame. So once we actually tap into this zone here, I simply just went to the 1 minute time frame and I simply just started looking for all of my confluences. All right. So this trade here, let me actually bring up proof that I took this trade. Give me 1 second, guys. All right. So here's the actual proof that I took this trade where I did. So you can see on the 1 minute time frame, I basically essentially have the same markup here. Okay. Oh, let me change this slightly. I would also suggest that you all never just trade from your device, okay, because you can see the market slightly different on something like your phone than you do on the actual charts themselves. So let's bring that image back up. All right, so here we can see that I waited for price to give me this sweep of liquidity here, okay, then, right, we interact with this demand here. We then create a failed reaction as price pushes to the upside, pushes back to the downside, takes out this demand, so that I know for a fact there's some type of supply that comes into the market here. We then create some type of inducement for price to later run upon. Price ran on that inducement. We were tagged into the trade, all right, and then price pushes to the downside. Now I actually took more than one entry here. Within this inducement here, I also took a trade, okay? It was a little less than my full risk, okay, but I still added a little piece of extra risk on there. Really, if I'm being honest with you guys, it's simply because I'm going out of town this weekend and I wanted this trade to to cover some of that expense, right? So got a quick return on investment that way as well. All right, so if we head back to the charts here, all right, all those confluences you guys can see take place right here. All right, let's move this down just a little bit. There we go. That was my entry on KOT Forex. And yeah, not too bad. So this was around a 22.2% gain. Stop loss was up here. 2.9. Yeah, it's slightly different than when you actually put things on TradingView. So 2.9 was my stop loss. Okay, so around 19.59%. Okay, that sounds more like it. When I actually did the calculation, it was around 18.6%. So that's perfect. So yeah, it's different by 1% simply because I close 1% of my trade when I'm up 1 to 4R. Okay, so you guys can simply look at this number here and always assume that it's going to be minus 1% of this here, right? Or 1R of this here. Okay, so once I was in the trade, really at that point, we just allowed price to do its thing. And our target was, my first target was this area here, actually. Or, yeah, I believe it was this area here. I think I chose it based on the M15 time frame. Yes. Okay, so my first target was this here, okay, for around 10.59%. So I closed 80% of my trade here, and then I let the rest run, and I closed the rest of my trade at this point right here based on the M15 time frame, right? So, you know, really I just wanted to get out of the trade here, okay, or at least a certain position of my trade here, and then just allowed the rest to run to collect me extra profit right here. All right, so 9.41%. Not a bad day trade whatsoever, risked around 1.7 pips for around 33 pips, giving us a total of 19.41% since we risk 1% per trade idea. All right. With that being said, I'm going to go ahead and wrap this up here. If you guys enjoyed this video, feel free to leave a like, subscribe to the YouTube channel. I would love to have you guys a part of the family before we start doing vlogs and more interactive lifestyle content. If you guys do have any questions, as always, feel free to contact me. And for those individuals who want to be able to trade the markets just like me, feel free to check out my institutional trading course. First link in the description. And if you guys want a coupon code for that institutional trading course, feel free to contact me, and I'll even include a little surprise for you. All right. With that being said, I'll catch you guys on the next one. Much love. Peace out.